Real Vision CEO and former hedge fund manager Raoul Pal has shared the news of India's new tax regulations on digital assets. On February 1, India's Finance Minister Nirmala Sitharaman announced that the Asian country will now impose a 30% tax on proceeds from cryptocurrencies, non-fungible tokens, and other digital assets. Since the news broke, there have been mixed reactions to it. While some people are happy that the second most populated country in the world seems to be accepting the use and trading of digital assets, others are wary of the high tax that has been levied on them. Welcome to Savvy Finance. In this video, we examine Raoul Pal's thoughts on the Indian government's decision to impose a 30% tax on digital assets. We also take a look at the digital asset space in the Asian country and what this announcement will mean for the space in general. Please watch the video to the end, click the like button, subscribe to the channel, and turn on post notifications. Everything helps us grow the channel so we can continue bringing you regular updates on everything crypto. Raoul Pal seems very excited about the announcement. Quoting a tweet from Mr. Shetty, the CEO of Indian cryptocurrency exchange platform WazirX, Raoul Pal announces that the taxes show regulatory acceptance on the part of the Indian government. Raoul also states that India is important to the digital assets revolution. India is not only the second most populated country in the world with over 1.4 billion people, but it is also recording the fastest adoption of digital assets in the world. In his tweet, Raoul Pal writes, "Big news in India from the budget where the government has unveiled taxes on virtual digital assets gains, showing regulatory acceptance. Final regulations in coming months, but as the fastest growing adoption, India is extremely important in the digital asset revolution." In another tweet, he writes about the digital rupee, India's digital currency, which will be based on blockchain and other technologies. The digital rupee is also scheduled to roll out in 2022-2023, which is surprisingly fast, but the Indian financial system is essentially highly digitized already. Not sure how it all fits in the UPI payments system yet. All good news. India is not the only country looking to adopt a digital currency. The Chinese digital yuan introduced in a public pilot nearly 2 years ago has been very successful. Officials recently revealed that at the end of 2021 there were hundreds of thousands of transactions involving almost $14 billion and 261 million unique users. The digital rupee is expected to record similar growth spurts in little time, especially with the government's seemingly friendly outlook towards digital currencies. While many people are concerned about the 30% tax, Raoul Pal believes it could have some positive effects in the long run. Replying to a comment asking how he feels about the tax being on the high side, Raoul writes, "It is what it is, and over time, once they see the benefits, it can come down maybe. I don't know the Indian tax system well, but I do know that India has a low tax take-up, so this is good for the government budget overall." Raoul Pal is not the only one excited about the tax regulation announcement. In his tweet, the CEO quotes the tweet of another CEO. Mr. Shetty is the founder and CEO of WazirX, an Indian cryptocurrency exchange platform. The platform, which has been purchased by Binance, hit a $38 billion trading record in November 2021 and even increased activity when news broke that the Indian government was planning to ban private crypto holdings. Shetty's tweet reads, "Lots of information to unpack here. Do go through." Most importantly, this doubles down on the fact that virtual digital assets are legal in India. We even have an official definition in the document below. Shetty accompanies the tweet with documents specifying the new regulations. Some of the most notable features of the regulations are: the government plans to levy a 30% tax on all income on digital assets. There will be no deductions with the exception of the cost of acquisition of the said digital asset, which essentially means the tax will only cover profits made from digital assets. There will be no tax considerations on losses. If some gifts a digital asset to another person, the recipient will bear the tax burden. While the news has been met with mixed reactions, it is better than an outright ban of cryptocurrencies in India. As Raoul Pal has stated, the new announcement shows that the Indian government is taking a more friendly approach towards cryptocurrencies and other digital currencies. A similar scene is playing out in Russia and other technologically driven and fast-paced economies around the world. If all these countries take a more favorable approach, hundreds of millions of people would soon be joining this space. What do you think about the tax on cryptocurrencies in India? Is the country trying to make the best of the situation or being too heavy-handed to discourage people from trading? Please share your thoughts in the comment section below. Also, remember to like this video, subscribe to the channels, and turn on post notifications. Thanks for watching.